Welcome to the Mortgage Wise radio show and video podcast,
Hoo-ah.
where we educate and provide expert advice on personal finance, mortgages, and real estate investing.
Show me the money.
As a result of what we do, our team has helped hundreds of first-time buyers, experienced buyers, and real estate investors achieve their goals of home ownership.
I wonder if there's a connection there.
Here are your executive producers and mortgage advisors, Randy and Veronica Chambliss.
All right. Welcome. Can you hear me okay? Veronica, can you hear me okay?
Yes, sir. Can you hear me?
I hear you loud and clear. You're looking real beautiful over there, young lady. How are you today?
Thank you. Good, and you?
I'm doing better than good. So listen, guys, we are live. We are streaming. I'm excited. Today is a great topic. But before I get started, guys, welcome to another episode of the Mortgage Wise radio show. In video podcast. I'm Randy Chambliss. I'm your executive director of Louisiana Housing Authority, but I'm also a corporate branch manager with Geneva Financial. And I have across the state or in another state,
Veronica Chambliss. I am also a corporate branch manager with Geneva Financial and a director of housing for Louisiana Housing Authority. And today, guys, we're going to be talking about President Biden announcement of extending the foreclosure moratorium and the availability of forbearance relief for FHA, USDA, and VA single-family home loan borrowers experiencing financial hardship due to COVID-19, guys. So, Randy, you ready to start us off?
Oh, absolutely. We chose this topic because the announcement came out last week. And I remember I was driving and Veronica called me and we were just having a conversation. She said, Randy, did you hear what happened with President Biden? Did you hear that the foreclosure moratorium was extended? I was like, no, I didn't know that. So she wanted to explain to me the detail of what happened. And I was excited because it was really, really needed, right? If you guys been following us, we've been talking a lot about foreclosure prevention. And that's what Louisiana Housing Authority is, for you guys who haven't, that don't know who Louisiana Housing Authority. We are an advocate for homeownership, number one. Number two, foreclosure prevention specialist. And number three, a housing development organization. And so that second piece, foreclosure prevention, that's a huge piece because we provide the education and resource and tool for people to actually keep their home and don't lose it through a foreclosure, right? And so the reason why this is so important that it was extended to June the 30th, right, Veronica?
June 30th, yes, 2021. Yep. Mm-hmm.
So June 30th has been extended. And what that simply means, guys, if you are in a position right now where you lost some income or lost all of your income and you cannot make your mortgage payment, then you can pick up the phone, call your mortgage servicer and say, listen, I want to request a forbearance because of COVID-19. And so they will grant that extension to you, or if it's going to be something new, you haven't did it before, they're going to allow that to happen all the way up to June 30th, only if you really need it, right? So I want to really, really stress that because I come across a lot of conversations and some people be in a position where they want to refinance. And I'll hear stories like, I didn't really need it, but when I called to make my mortgage payment, the lender or the servicer say, hey, I can offer you a forbearance. Would that help? And even though they didn't really need it, Veronica, they still accepted that. And, it's critical that we know that difference. Wouldn't you agree?
Oh, definitely. Because my first question would be, why you being so nice, Mr. or Mrs. Bank?
Yeah, right.
I want more details.
Right. Something got to be wrong. They don't want to collect your money from you, right?
Right.
And so, from that standpoint, if you really need it, then, by all means, pick up the phone, call. But you want to educate yourself as well. You want to make sure that you understand the ramifications of it. You want to understand how do you come out of forbearance, right? And so one of the things that you have to understand and know that if you decide to refinance out of that forbearance, because this money has to be paid back. It's not forgiven, right? So let's say that your mortgage payment is $1,000 a month for your principal, interest, and taxes, and insurance, right? And you've been on a forbearance plan for 6 months, right? Then that's $6,000 that you have to pay back, right? And so when COVID-19 really hit back in March of 2020, last year, right, that CARES Act went into effect and a forbearance moratorium went into effect, right? And then that allowed the banks not to foreclose your home. Because if you can imagine for a moment, people lost their income, lost all of their income, lost all of their savings, and all of a sudden you have foreclosure that's foreclosing aggressively every day, thousands and thousands of people losing the house into millions. That would not been good at all for our market. That would not be good for the economy. So immediately what the government decided to do was say, listen, let's put this forbearance in place, this CARE Act in place. So now they give people an opportunity to call their mortgage service provider, right? Talking about government-backed loans, FHA, VA, USDA. And then that allows them to get that deferment, in other words, right? Without the bank foreclosure or harassing them every day, right? Now, back in the first wave was 3 months, right? You had a 3 months forbearance. Then if you needed an extra 3 months, you could have went to 6 months and so on and so forth. But my point is, come next month is going to be the year, right? The year of that forbearance COVID-19 CARES Act, right? And after that year is over with, it was projecting that they were going to have a lot of foreclosure that's going to be snowballing because people didn't have that money to pay back. So imagine for a moment, we use that same scenario, $1,000, right? Mortgage payment, and it's 12 months down the road, that's $12,000, right? So you have to pay that money back. And so now you just want to make sure you educate yourself to know what the forbearance plan is, what this foreclosure moratorium is, and then how, most important, how you can get yourself out of that and get yourself back right with your finances. Veronica, you want to add something to that before we kind of move on?
No, pretty much. Well, I guess I do. Like you said, a lot of people was taking the forbearance just because the bank offered it to them, but a lot of people was running into a problem. So when rates hit all-time lows, they were in forbearance. They couldn't take advantage of the low interest rates. Now, luckily, the rates are still low. However, the banks, the lenders wanted you to be out of forbearance, have all of those back payments paid up, and then you had to show at least 3 months consecutive that your mortgage was paid on time in order for you to refinance.
Wait,
So,
say that again, because that's very, very important. If somebody need to refinance, right?
right.
What is the qualification one more time?
Well, the requirements are, hey, you have to have all of your back payments paid in full, right? And 3 months of consecutive mortgage payments paid on time in order to refinance. So they wanted you to come out of the forbearance plan in order to take advantage of the low interest rates. So a lot of people was stuck, and they couldn't refinance. So like currently we are now starting to refinance people that came to us 3 or 4 months ago saying, hey, I want to refinance. And once we told them, hey, what you have to do, so they are now finally able to take advantage of the low interest rates. So again, back to what Randy said, if you don't necessarily have to take the forbearance, don't take it, because you don't know what that's going to do to your credit in the near future, and how lenders or any other banks, whether you want to get an auto loan, credit card, or anything, you don't know how that's going to affect you, because they may frown down on you. We don't know, but if you don't need it, don't go for it. Just keep paying your mortgage.
Absolutely. And by all means, if you do need it, go ahead on and utilize it. That's what it's
Exactly.
for, right? And
Yep.
so having said that, let's talk a little bit about, interest rates, because Veronica mentioned that interest rates was a all-time historic low. And I think we need to understand why that happened and why is it still currently happening, right? For example, I've been in the mortgage industry since 2008 when I first obtained my mortgage loan origination license, right? And what happened was, this is a quick story. Back in 2005, when Hurricane Katrina hit, I was in Gentilly, right? In New Orleans, Gentilly. When the hurricane came, Hurricane Katrina, I lost everything I owned in that storm. Water was to the roof of my home. But at that time, I was working a job. I was making really I guess, pretty good money, as people will say, right? But I was also spending really good money, right? Money was going right at the door. I was buying cars and rims and all that other craziness, right? Clothes and all that stuff. And so at the end of the day, when Hurricane Katrina hit, I was broke, I was busted, I hit rock bottom, and I was literally broken, right? Because I had less than $500 in the bank account. I'll be the first one to tell you my credit score was horrible. It was in the low 500s. And I didn't have a financial education, right? I didn't understand the rules of money, right? I knew how to spend it and I knew how to make it, but I didn't know how to leverage it, right? So my whole point of it is, thank the Most High God, He didn't leave us homeless, right? He kept a roof over our head, He kept bread, water, and shelter, and clothing. And so, but He also taught me some things along the way. He brought some people to help me. Like my brother, he purchased a home out in Slidell, Louisiana, like a year prior to that. So he was kind of coaching me and teaching me what that looks like, right? And then I had another mentor. He was a senior vice president with a global financial service company, and I was able to learn from him as well. And then I started to work on my credit, right? I got connected. Well, I was connected with a couple of companies that were doing credit restoration, and it started deleting these negative, inaccurate, outdated items that was on my report that was keeping my credit down. And I started to actually save money finally, right? And so within a year, I purchased my first home, right? Within a year, it was 2006 in December, in fact, and I was 26 years old. And 30 days later, I bought my first duplex as well, my first rental property. So if you can imagine for a moment, a lot of family members and friends and colleagues at the time was asking me, well, Randy, how did you do it? Like, how did you buy 2 homes after being broke, busted, and broken during Hurricane Katrina? Like, what changed? And so I started to share information and resources and connecting them. And I found the passion of helping people to buy houses, literally. And then from there in 2008, that's when I obtained my mortgage loan origination license. I tell you that story because it's the fact that out of all those years, I've never, ever, ever seen a market like 2020, right? Even though all the chaos was going on with COVID-19, but the housing market and the mortgage industry, I've never seen anything like that in my life. It was just booming. Why? Because interest rates was at a historic low. And Veronica and I, we have mentors, like we have our colleagues that we consult with, CEOs of multi-million-dollar mortgage banks that we're talking to and being coached by. And they're telling us the same thing. Out of all the years they've been in the mortgage industry, they've never seen a year like 2020. Even 2008 and 2009, none of those years compared to 2020. And so what happened was a lot of people realized that the interest rates was at all-time low. So people wanted to refinance, right? They wanted to go from the $800 mortgage payment to a $600 mortgage payment. They wanted to pull $25,000, $30,000 worth of equity out of their house and keep their mortgage the same payment every month, but yet they could take that $25,000 and go pay off debt, right? Or use that money to start to invest in real estate. Whatever they want to do, people realize that this is the time to do it. And then, of course, buyers was like, okay, I need to buy, all right? And so all of a sudden, we turned from COVID-19 in the midst of this horrible pandemic, where the market for housing and mortgages was booming, and it's still booming. So all of a sudden you had a flood of purchases, you had a flood of refinancing, and it was so good, and it's still so good that it became a seller's market, meaning that the inventory was low, meaning that houses on the market to be sold was so low. You had a ton of buyers that's qualified, creditworthy, bankable, right, ready to go, but you only had a limited stock of homes that was on the market. And so that's where we at today, right? Now, the question is, why did the interest rate go so low? 2, will it stay at this historic low, or will we see a rise in 2021? That is the question, right, Veronica?
Yes, sir. So you want to give us the answer?
You already know we're going to talk about this thing. And so what happened is, guys, unfortunately, I say that humbly, I say that very respectful, right? Unfortunately, when you have issues like wars, pandemics, major things that's happening in the world, oftentimes you're going to see the interest rate go low. because the Fed step in, the Federal Reserve Bank step in and say, listen, how can we calm the market? Because people are hysterical, people are afraid, fears, and right. So people are motivated by their emotions on their spending. So they know from past experiences, if we don't cut interest rates and get it low as possible, then people will stop spending money, they will stop buying, the economy will slow down, and then we really have a massive wave of personal finances that's just going to be tanking across the world. And so they lower the interest rate to keep people spending money, right? Businesses get to go to the banks and borrow money at cheap rates, right? The mortgage bankers have to go to the Federal Reserve and get these money at a super cheap rate and then pass those savings along to the end consumer. So years ago, we were talking about 5.1% interest rate. We were talking about 4.1. All of a sudden, we was at 2.85%. It was just crazy, right? So that's the reason, guys, why interest rates goes low, because they're controlling the economy. They're controlling the emotions. When fear is there, in other words, when fear is there, then interest rates come down to make people go and spend. Did it work? Absolutely, they work. We just finished talking about how the mortgage and the housing industry has been booming. So the strategy absolutely worked. And by this being a global pandemic, then in our lifetime, we never seen this before. That's why we had this historic lows and people was flocking to buy housing, and it still is. But here's the thing, guys, you got to be aware of this part. Well, as the fear starts to be relieved, right? As the vaccine is starting to be rolled out, right? From state to state, it's being rolled out. People are starting to get the vaccine, and the vaccine is starting to give people confidence, right? The fear is starting to go away, and it's going to start to go away even more. So as the fear starts to go away, now people is okay with spending, if that makes sense. So now all of a sudden, the Federal Reserve Bank can say, okay, well, we accomplished our goal. We can't keep these rates at a historical low forever, because everything's a wealth cycle, guys. That's why every 10 years or so, you see something crazy go on, right? It's a wealth cycle. That's why you have to be prepared with your personal finances, right? And so now, as the Federal Reserve say, okay, vaccine is rolling out, people are feeling good, they're feeling more confident, let's raise up the interest rate a little bit, boop, right? So let's raise it up just a little bit more, boop. Now, all of a sudden, as the interest rates start going up, all of a sudden refinances start to slow down, because people not so motivated to come and get a refinance, because we're almost back to the same interest rate that they currently is right now, right? So we don't know when it's going to happen, right? We're only looking and reading the experts and talking to the experts in this industry. So by all means, our disclosure, we're not telling you that this is going to happen. We're just saying, based on our past experiences, what we know, based on the mentor that we have, that we're being coached by, this is what we're hearing in this banking industry, in this financial world. This is what we're hearing. So you just want to be prepared that, hey, if you have not took the time to say, you know what is my interest rate on my current home? Should I refinance right now before these rates go up? Then you might want to have that conversation with your spouse or whoever else is involved in that conversation. If you've been thinking about purchasing a home, then now might be a great time for you to make that decision, because when the interest rate is low, you get more home. So Veronica, can you just touch bases a little bit and explain, when interest rates are low, that people could actually afford more housing, right? Versus when interest rate is high and they may not be able to afford as much as a home.
Exactly. Yeah, that's true. So the lower your interest rate is, the more house you can actually qualify for. The higher the rate is, then the less amount you can qualify for. Why? Because your principal and interest payment, of course, is based on the interest rate and your total debts. So as mortgage lenders, we have what's called debt to income ratios that we cannot exceed, right? I wanted to touch on something else you said, and it just slipped my mind. I'm having a senior moment at this moment. Dang, it was about refinances. It'll come back.
Oh, no doubt.
But you're definitely right. So, that's what I wanted to say. So if you are considering just thinking about, hey, will it benefit me to take advantage of the lower rates now? If my mortgage payment is so and so, my interest rate is this, let me just see, because it doesn't hurt to just get a lender to look at your current mortgage statement and give you some numbers based on that. And some people have the thought of, hey, if I refinance, then I'm starting over. I mean, I've been in my home for 10 years. I mean, I'm starting over. No, you don't have to always go back with a 30-year mortgage. So it goes back to what you said, Randy, with the lower rate. So most of the time you can refinance at a 15-year mortgage or 20 years if you don't feel comfortable going back with a 30-year. But a 15-year rate may be way lower than your 20-year and 30-year. So you have options. That's all I'm saying. You have options. You do want to seek a lender's advice and see if it just makes sense to refinance, right?
Right. I mean, because we're talking about personal finances. That's the whole point, right? You know, we talk about it all the time. Like, you want to be in position as we go into this decade that we're in, right? 2020 all the way to 2030. Guys, we have 5G that's rolling out, right? You keep hearing this through the cell phone or mobile companies, 5G network. It's truly, really not here yet. But when this 5G really, truly roll out, we're talking about self-driving vehicles, guys. We're talking about
what, AI technology?
Exactly, artificial intelligence. This is going to be huge. It's gonna. You think the pandemic, lost a lot of jobs? There's going to be a lot of jobs lost from AI, artificial intelligence, right? And so my point is this: don't get comfortable, right? You have to take care of your personal finances, right? First off, the solution is you have to, number one, have a personal financial plan in place. You have to have a plan to minimize your monthly expenses every month. Don't worry about the Gucci shoes right now. Don't worry about the brand new Mercedes Benz right now that's going to cost you $700 for an oil change and a tune-up or whatnot. Don't worry about these things. You need to get your living expenses as low as possible right now.
Right.
You want to pay off as much debt as you possibly can right now.
And refinancing could be that solution, because what if you can save an extra $200, $300, or $500 on your monthly payment? You can use that money to do what? Pay off a credit card or two.
That's right. Absolutely. And then on top of that, a lot of people who purchase homes, they don't put 20% down, right? There's a rule in this banking mortgage world is that if you don't put 20% down on FHA or conventional, then you are forced to pay what we call private mortgage insurance or mortgage private insurance, right? And what that's basically is insurance policy for your mortgage servicer that you pay on a monthly basis through your through your escrow, right? It might be $75 a month. It might be $150 a month. I've seen $200 a month in my past, right? Or more. So this mortgage premium that you pay every single month goes to this insurance policy for your lender, just in case you foreclose, you are in default of your promise to pay. Then when they foreclose on your home and they take possession of the home, they could go tap into this insurance policy, right?
That's right.
But when you have equity already created in your home, right, because you've been holding on to the house for 10 years, 15 years, 7 years, whatnot, right? Now, all of a sudden, you could think about maybe refinancing, getting to a lower interest rate, but at the same time, you can dump that private mortgage insurance payment. So
we did.
Exactly.
We did that personally. So
Exactly.
when we bought our home together, we purchased our home with a FHA 203K loan. That's a renovation loan where the lender give you the money to purchase the house, and also you get an escrow account with the rehab costs. That's what we did. So once we finished our home, we had $60,000 worth of equity.
Yep.
So what we did, we refinanced from the FHA loan
Immediately.
right, when we were allowed to, because they do have a certain time frame. So we refinanced out of that FHA loan and we went into a conventional loan. So whereas we can cut grass and still pay our mortgage.
Exactly. We could be on the outside or something like that.
Exactly. So all we saying is, if we can do it, exactly. And all we saying is, if we can do it, you can do it.
Yeah, absolutely. It's just the knowledge of it, because when you look at the personal finances, now you are refinancing. You might be pulling some cash out. You might pull out 10,000. You might pull out 30,000. I don't know, right? But you could use that money to pay off the other debts that you have. Now you debt free, right? or if you're already debt free, you could use that money to go purchase another investment or a first-time investment property that's going to bring you some more cash flow, right? But at the same time, like I said, you dumping that private mortgage insurance. So if you've been paying that premium every month, it goes away. Why? Because you no longer, the loan to value is no longer high, right? You're below the 80% because you had equity, right? So I hope you guys get that. I hope that makes sense to you. And so I challenge you, get your mortgage statement. I give you that challenge. Look at your mortgage, principal, interest, taxes, insurance, and see if you still have private mortgage insurance that you're paying. And if so, you might want to consider doing something differently. And also too, if you have a rental property right now that's been a burden to you, right? And the market, we talked about this earlier, the market is starving for inventory, it's starving for homes right now. So if you're a landlord and this property been giving you a headache and you're considering selling, then connect with Veronica and I. We can help guide you through that process. We have a lot of resources, a lot of team members, etc. And then from there, you might want to sell a house and you might have $60,000 worth of equity, $100,000 worth of equity. Who knows? However you bought. And so now when you sell that property, of course, you want to consult with your CPA for your capital gain tax, whatever tax bracket you're in. My point is that money, when you sell that house, go and pay your debts off, even to your personal mortgage could be paid off. So now imagine for a moment, I really want you guys to really visualize this for a moment. Just imagine, just for a brief moment, what would life feel like, or what would life be like if you had no debts, no car loans, no personal loan, no mortgage, right? And all you had was just your food that you need to feed your family. What would that look like? More important, I want you to know how an experience in the spirit, what would that feel like? I could tell you guys, that's amazing. That's what I'm trying to tell you guys. That is an amazing feeling. So I want you guys to be focused on that. I hope you guys really picking up what Veronica and I'm saying. And our whole goal is to be able to provide you with the tools, the knowledge, and the resources to help you to be able to survive in these coming years. Because at the end of the day, great things are happening, right? Depending on your perspective, how you see life, right? Great things are happening. Life is unfolding beautifully for Veronica and I. We're healthy. Our family is healthy. We thank the Most High God for that. And every day we see things are unfolding in front of our eyes. And coming from where we come from, like I said, I told you one of the stories of how I was hit rock bottom, but there's some stories that I can tell you too. I'm sure Veronica could tell you some stories. So anything else you want to add on? That's right. I'm telling you. Anything you want to add to that, Veronica, before we move to the next topic?
Nope, we can move along.
All right. So today, guys, we're going to talk about this week's motivation quote, right? So every week on a Mortgage Wise radio show, we have a motivation quote. And so I'm going to credit Steve Harvey for this one, right? I was watching a few videos and Steve said, listen, if you want to be successful in life, meaning if you have a goal, wish, a desire that you want to accomplish, right? There's one guarantee in this walk, or in that walk. If you want to be able to reach your goals, your wish and desire, there's one guarantee. And that guarantee is everybody's going to have a turn back moment. You're going to have a turn back moment, meaning a moment in time in your life you hit rock bottom when everything is going wrong and you want to quit. And you want to give up because it's hard and nothing is going right. That's your turn back moment. Steve said there's one guarantee that if you quit and you do turn back, you will never reach your vision. You will never reach your goal. You'll never accomplish your wishes and your desire. That's the guarantee, guys. So you cannot quit, right? And that's why me and Veronica love motivating. We love personal development. We love mindset development. We love, you hear people that come around us. Listen, don't come to me with negativity, right? If you ain't coming in the right spirit, I don't want to hear, because words are spirit, right? The Most High God told us in his good book, right? My words are spirit. And so whatever you speak, right, you attract that into your life. So we speak blessing, we speak prosperity, good health, good strength, right? And so that's what I want you guys to focus on. So again, that's the turn back moment. When you at your turn back, I don't know who I'm talking to right now, whoever listening, if you at a point in your life you're thinking about giving up, don't do it. The only thing you're missing is just information. That's it. It's just something that you don't know yet, right? Once you obtain that information, keep pushing. And then life is literally testing you. Life want to know, do you really want this goal, this desire? Do you really want a good relationship with your spouse? Or you just talking? Do you really want to be debt-free? Or you just talking? Do you really want to have a great relationship with your children or your parents? Do you really want to have cash flow coming in every single month that you don't have to go to work for nobody else again? Do you really want to take dream vacations, or you just talking? Life want to test you, right? And my mentor told me a long time ago, Les Brown, he said, your word shows up in your conversation, your words, it shows up in your conversation. But your expectation shows up in your behavior. What are you doing? Keep plugging away, guys. Don't quit. And I'm telling you, me and Veronica experienced it. And it's a beautiful feeling when you get on the other side, guys. So listen, that's all I had. You know, we're going to close out. If you want to connect with Veronica and I'm Randy Chambliss. You can find me on Facebook or Instagram at Mr. Randy Chambliss. Right, we have some YouTube channels that you can go and check out a ton of the videos. My direct number is 504-270-2783. And my website to learn more about any financial needs you need finances for home, that is randyknowsmortgages.com. Veronica?
And my name is Veronica Chambliss. My contact number is 504-715-4388. And my website is vknowsmortgages.com.
Awesome. So guys, listen, I want to let you know we offer a no-fee guarantee, a free consultation for if you have questions about refinances, about the home purchase, home selling. Listen, we have free consultations for you. Call us. We don't charge you for the consultation. We don't charge you for the credit checks. None of that thing, none of those things. So we are here to serve. We are serving leaders. God bless and have a great night on purpose, guys. Take care.
Take care.